Welcome to the Silent Trading channel. Today I'll be updating the gold chart with you guys on Thursday, the 19th of February, to see whether right now are we going to go into a long position, or are we going to a short position based on the price action right now, right? So in the sense that you guys call a bias, a direction, a trend, no. In my sense, I call it a price action. If the price action is going to the buy side or the price action is bullish, I'm going to be buying, and if the price action is bearish, I'm going to be selling. But that also depends on whether the price action is really on that side and how to determine the price action, right? So before you guys watch, please subscribe, like, comment, and share if you like this video, and to support me in my trading journal and me guiding you guys using my trading strategy and theory, right? So let's start the analysis on the H4 or the 4-hour time frame. As we can see, in the 4-hour time frame, price has already created, the market has already produced a bullish price action, right? I'll first wipe out I'll first wipe up this triangular shape that have been out of use because it been broken below, right? And I'll draw a new one which is from the low to the high, right, before going to a sideways direction. And we can see at this point in the chart, right, we can see at this point in the chart, price action right now is on the bullish side. Because why is it on the bullish side in a 4-hour time frame? Because bullish price action was produced here and was complete at this resistance being broken, right? This resistance being broken means that price action is bullish from this side, and right now the market is trying to go into a rebellion, right, by producing a bearish price action over here, and has been trying to break this support over here, right? So we see that there are always a tug of war in the chart between buyers and sellers, between bearish and bullish price action. And every time the chart goes up and up and up from a bullish price action, there will always be sellers trying to take the market back. There will always be sellers trying to take control of the market. But the problem is, if the manipulator is still going to play on the buy side or going to play on the bullish side, the price will never reverse from anywhere. It will only be reversing for a short while to clear off volume, right? There will never be permanent reversal to the sell side, only a temporary reversal to the sell side, only a temporary bearish price action, only just to clear off buy volumes from the market before the market goes up again, right? So from this we can see that the market is right now trying to create a bearish price action, but will it be able to complete this bearish price action or not? We are still at large, right? We are still at large as to whether the market can really create or produce a bearish price action, because a bearish price action, to be strong, it has to be complete, and to be complete it has to break support, and not just any support. Key support level has to be broken for the bearish price action to be valid, for the bearish price action to be legit, right? So this bearish price action isn't a complete one yet, isn't a valid one yet, because a valid bearish price action needs to be complete by the price going down to break support. And right now only a bearish price action is created but not complete, right? So when we say price has produced a bearish price action, yes, we can say this is a market producing a bearish price action, but it still isn't complete yet, because completing means the market must drop down to start accumulating buy volumes from the market. Only then we will start to believe that bearish price action is a valid one and the price can start going down further, right? So right now we do not assume by yourself that price is now going to a bearish side, you're going to be selling. No, we need to be able to understand what the chart is doing, and to be able to understand we need to go into a lower time frame right now, because the 4-hour candle, from this side of the 4-hour candle, we can see this as a candle retracement, right? A pullback before a break above also, or we can see this as a reversal. So this point of the chart can go both sides. It can be a retracement and then break above, right, and then expand upward, or it could also, the chart could also be creating a bearish price action, right now, right, then to go up and then drop down to break this support. And if the chart on the market is able to break this support by having a body candle close below this support, right, then we'll see about how to go into a short position after the price has broken support and then start retracing. We will then start to anticipate the spot to enter a short position or a sell position and wait for the price to drop down, right? So right now, don't be assuming that the price is going to expand upward. Don't be assuming that the price is going to expand downward, because right now we see that the price is still going, it is still in a sideways direction, which means to be able to see clearly, we need to lower our time frame and go into the 1-hour candle. And as we can see, in the 1-hour time frame has pushed down, right? Pushed down after creating a high, and then sideways for about 4 candles, and then start pushing down, breaking this support, right? By touching this support means what? Means the market has already accumulated buy volume, and after accumulating buy volume, then the market dumps the price down, clearing off or taking out buyers, right? Taking out buy volume from the market, and by taking out buy volume from the market, the problem is the market maybe has already taken out buyers from this support, but another problem is when the market push down, there will still be buyers waiting to buy, right, by going against the trend. So they will start buying at every support there is, no matter here, right? Even here there will be people buying, even here there will also be people buying. But that also depends on whether the market is going to go down in a sideways direction, or the market is going to break below and then start pulling back and then going up again, right? So right now we wait for the 1-hour candle, right, for this 1-hour candle to at least close above resistance, which means to be able to enter a buy position, we need this 1-hour candle to break this resistance and then retrace before we start buying. And if the price start going up and break resistance, then we will then come to a conclusion that the market is really creating a bullish price action, that the bullish price action is produced and valid, right? Because if you buy over here and the market start pushing up and then breaking resistance, which means we know that the market has produced a bullish price action and a valid one at that. And then we know we are going to be holding on to that position for however long you're going to be holding, or at least hold until the price start reversing at some point in the market, and then you'll start to close the position, right? But if the price start going down further and further, we are not going to be buying at any point right now, because we are waiting for the price on the market to accumulate enough buy volume and then dump down on the buyers before we start buying, or accumulate enough buy volume, dump, right, and after dumping The market needs to start producing bullish price action. The market needs to start producing bullish price action and needs to validate that bullish price action before we can start buying, because we need to have lesser risk for more profit, not more risk for less profit, right? So we wait for the price action to be sure before we can start buying, before we can start selling. So right now, don't go into any position. Wait for the price to reveal the real price action right now. Wait for the price to reveal what it is doing. If it is going to be accumulating buy side volume and then dump on the buyers, we will only then start buying after buyers are taken out from the market. We are not going to be buying before the buyers are taken out from the market. Are you clear with what I'm saying with you guys right now? So right now, wait for either the price to dump and then produce a valid bullish price action before you start buying at a retracement, or you can buy if the market dump on the buyers, and then you can buy at least one position and at least expect the market to pull back and then take profit from that pullback. If the market is not going to pull back, you wait for the market to create a bullish price action and see if that bullish price action is going to be validate. If that bullish price action is valid, you can hold on to that position and wait for the price to soar up, expand upwards and upwards, right? So for today, that's all I'm going to be advising you. Stay tuned to my videos tomorrow. Today I'm a little bit sick. I will not be with you guys for too long. So wait until I'm well. I will be revealing more and more for you guys to watch. So stay tuned and wait for me to get well before I start teaching you guys and guiding you guys more and more. So for today, I'll see you guys tomorrow. See ya.